Welcome to the Roy Morgan Weekly Update. Today we're looking at politics, confidence, both consumer and business, inflation, and the latest voting data from Indonesia, which faces presidential and legislative elections early next year. But first up are the key weekly indicators, which don't hold good news for the government this week. Support for the Albanese government's down 1.5% to 54.5%. Although this is still ahead of the coalition, obviously, on 45.5%. Government confidence, whether people think the country's going in the right direction or the wrong direction, is down by 4.5 points to only 82. This is the lowest government confidence since the Albanese government was elected in May 2022. Now, a majority of 51.5% of Australians say the country's heading in the wrong direction. And only a third, 33.5%, say the country's going in the right direction. And consumer confidence is down. Despite the Reserve Bank opting not to increase interest rates last week, there's a lot of discussion that they will go up again in a few weeks' time. So consumer confidence was down 0.8 points to 73.3. Consumer confidence has now spent 19 weeks below 80. And 5 weeks below the mark of 75, the longest period at these recessionary levels since 1990-91. The Reserve Bank's decision to leave interest rates unchanged didn't provide a boost to people paying off their homes, with their confidence down 3.4 points to only 65.2, a record low for this group. And consumer confidence for renters was virtually unchanged at 75. While there was a slight improvement for homeowners, up 0.6 points to 79.9. There was some good news on the inflation front, with inflation expectations down 0.4 percentage points to 5.5% this week. So Australians are now expecting annual inflation to be 5.5% over each of the next 2 years. Now a look at business. Roy Morgan interviews around 1,500 businesses each month, and the results for June show Roy Morgan business confidence down 1.5 points to 88.8, the lowest for nearly 3 years. Now, the drop in business confidence came before the Reserve Bank left interest rates unchanged last week, but after the Reserve Bank raised interest rates to a decade high of 4.1% in early June. Just a third of businesses say they're better off financially than a year ago, although there are more businesses with a positive view of their prospects over the next year. 41% expect to be better off financially. Concerningly, nearly half of all the businesses, 48.3%, say the next 12 months will be a bad time to invest in growing their business. That said, some sectors are far more confident than others. For example, education and training is on 125.8 and mining on 120.4, over 30% higher than the national average. The education and training industry has been one of the largest beneficiaries from the end of COVID-19 restrictions, and confidence in this industry has been riding high, averaging over 120 over the last 12 months. The mining industry in Australia has benefited hugely from the rebound from the pandemic and the war in Ukraine. The prices of key commodities like coal, gas and iron have soared over the last 2 years as economies reopened and then global export chains were redirected after Russia's invasion of the Ukraine in early 2022. So these key industries have boomed and have delivered the federal government its first budget surplus in 15 years. A record high of nearly $20 billion. In contrast, the electricity, gas and water industry continues to struggle with business confidence of only 26.5. The same booming commodities are providing a squeeze on prices for electricity suppliers, and especially gas. Australia's energy sector also faces challenges with the energy transition to renewable energy as coal-fired power plants close. The Liddell Power Station in New South Wales, which had a combined electrical capacity of 2,000 megawatts, closed at the end of April, leaving a big hole in the electricity market. Turning now to our northern neighbours, Indonesia, who face a key election early next year to elect a new president. Last week, we had the visit of current Indonesian President Joko Widodo. However, Jokowi, as is generally known, is not eligible to stand for re-election next year. Now, as many of you know, Roy Morgan continuously surveys in Indonesia, face-to-face, in people's homes all around the entire country. And the results of the latest Roy Morgan poll in Indonesia show that Jokowi's legacy is set to continue, with his party and his party's preferred candidate both holding significant leads. Ganjar Pranowo, the governor of Central Java Province, and the candidate for the Party of the Democratic Struggle, commonly known as PDIP, has the support of 28% of voters. That's well ahead of 2019 runner-up Prabowo Subianto on 16.5% and Anies Baswedan on 15.5% support. These three candidates have the endorsement of their own parties as well as other political parties heading towards next year's election, and are the candidates to watch. Clearly, Jokowi's protege, Ganjar Pranowo, is in pole position to become Indonesia's next president. However, importantly, there are still 40% of Indonesian electors who are currently supporting another candidate. They're there to be won over. And that's a wrap for this week. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic, and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest on inflation, expectations, consumer confidence, and voting intention next week. Take care. We'll see you next Tuesday.